Hello guys, this is Dave Malhotra, CPA. Welcome to my show for tax saving and money making ideas. Every month, 1 or 2 calls I get from my clients. I'm in car dealership and I have business. Should I buy a car? Should I lease a car? Sometimes they are not in business also. They ask the question, is it very cost effective to buying a car or leasing a car? If you have not subscribed to my channel, so please consider subscribing, and if you have any topic that you would like me to cover, leave a comment and I will cover in my future video. And also, if you like my video, please drop a like. For tax perspective, a business owner will get almost the same deduction. It's just not that much of difference if you lease it or buy it, because if you buy it, you will depreciate it. If you lease it, you would be deducting the leasing expense. But the question is, which one is the most economical, buying or leasing? It depends on a couple of factors. Are you going to keep that car for a little bit longer? 3 years, 5 years plus, 6 years, 7 years? Do you drive a lot? Are you looking for new models all the time? How much you drive? What kind of driver you are? What is your credit score? And last but not least, how much you willing to pay per month? It's just the same philosophy. If you buy a home, your monthly payment is higher because of the mortgage payment. But if you rent it, it's lower. Leasing is just a fancy term of renting. I would encourage you to do a little bit of research. If your budget allows you to pay higher per month, then buying would be much more economical. Most dealerships keep the car in their inventory with different features built in. And also sometimes they have a previous year model they would like to get rid of. So first thing what you need to do, instead of going to the nearest dealership, go online, write down all the phone numbers in nearby dealership in 40-50 miles radius, start calling them. Start talking to the salesperson, what features are you looking in the car, and see if those features are already built in any of those cars in their inventory, because those are the car they would give you for the lowest price. They would be willing to negotiate on those cars because the cost of keeping those cars are also not less. So they would like to get rid of. So if your monthly budget allows, look for those cars. Sometimes you get $5,000 to $10,000 below the sticker price. And if you're buying and if you have a good credit score, you can negotiate those terms. Let's see the features that you're looking for. That car is not in their inventory, and let's assume they don't have their prior year big inventory also. They are willing to negotiate. And if you have the same car and they are willing to give you for the little bit of discount when you buy it, and the same car they are willing to lease it, if you calculate the terms, buying is much more economical. So when you buy it, there is a opportunity cost because you paying per month higher amount. If you lease the same car and invest that amount somewhere else, you might be able to get the return if you are a good investor. Sometimes, depends, leasing also is the economical option. But how do you figure it out? A simple math. So if you put X amount of dollars as a deposit and you pay X amount of dollar per month for 36 months or 35 months, and then you have a buyback price, just add those up and see how much you paid in 36 months and see what is the price they are willing to negotiate. So if the total price in the lease you paid in 36 months is more than 10% of the sticker price or negotiated price, usually you get those deals with in a specific dealership, in a specific model. When the dealership is big enough, they have a higher volume, and then bank has a deal with them that if you sell X amount of vehicles, we'll give you, such percentage. So bank also gets access to those customers when they lease the car from the dealership. So they sell other products as well to the customer. So make sure you call 10 to 15 dealerships nearby and get the price. You will definitely saving at least $4,000 to $5,000 and sometimes $10,000, depends on the car you buy. Let's talk about deduction. As I said earlier, in a long run for business owners, it comes out the same way if you lease the car or if you own it. And for business owners, it's not always necessary to buy the car on business name, because if you are getting a loan, you will not get on the business name. have a written contract with the company, your own business, that you are giving this car back to business or you're leasing it to the company, and you can deduct all those expenses. So how do you deduct those expenses? So IRS offers you two types of deductions: standard mileage rate and actual expense. So standard mileage rate varies from 54 cents to 58 cents. IRS issues those guidelines in the beginning of the years in their publication. You should check with your CPA or whoever you file taxes with. In 2019, it's a 58 cents per mile. The most important thing, you cannot just choose 1 year standard mileage and next year actual expense deduction. If you have chosen to deduct the standard mileage, as long as you have that car, you need to stick with the standard mileage deduction. After a couple of years, when you change the car, you can change the deduction. You can go to the actual expense. So when you do not drive car much, actual expense will give you a little bit high deduction because of the depreciation. But if you drive a lot, maybe standard mileage will give you more deduction. So what are the actual expense deduction? Actual expense deduction is depreciation. If your car is on lease, leasing expense, oil, gas, maintenance, repair, tire, tune-up, insurance, any expense that you incur to maintain that car. Same rule applies here. If you are deducting as an actual expense, you cannot go to the standard mileage as long as you have the same car. Another important thing, your credit score is also a big factor, how much cost you will incur on the lease payment or the interest expense. The lower the credit score, bank will charge you higher interest rate, and the higher the credit score, you get the lower interest rate. So your cost will be depending on how good your credit is. Another important update, you cannot deduct car expense as an employee business expense. Meaning, if you work for an employer and you go to see the client and your employer does not reimburse you to go here and there and drive, you cannot deduct as an employee expense for the federal return. For a state return, you might be able to do it, depend on the state you live in. If you remember, employee business expense was a part of a Schedule A as a miscellaneous itemized deduction that was limited to 2% of your adjusted gross income. Let's see a calculation. Okay, let's compare a real world example, lease versus buy. So I picked up a real deal from the internet. The car price is $28,000 and they are offering you for lease and buy, assuming you have a good credit. And the lease option, you have to pay $239 per month for 36 months. And for buy, you can buy for 3 years, 4 years, or 5 years. In this example, I picked 4 years. So $3,000 down on both scenarios. You are getting here 0% APR for 4 years. If you calculate it, your monthly payment would be $529. So in the lease scenario, if you look at 36 months for $239 per month, it's total $8,604. After 3 years, you can buy this car for $18,674. So if you add that with $8,604 plus $3,000 down, you end up paying $30,677. In the buy scenario, you're paying $529 per month installment. 36 months, you end up paying $19,044 plus $3,000 down. So your total money that you paid is $22,044, and you still have 12 more months of installment left. So $6,348 multiply, that is basically $529 per month multiplied by 12. So total money that you end up spending for this car is $28,392 after 4 years. And here, if you buy this car after 3 years, or even if you get for 1 year refinance, you end up spending $30,677. But here's the catch. After 3 years, you have to come up with additional $18,674, or you get it refinanced at that time for 1 more year. Now you have another interest expense that you need to add. So if you calculate that, you already paying almost $2,000 more here on the lease side. Now, if you refinance this money after 3 years, your cost would be higher than $30,000 anyways. So it's always buying comes cheaper. Now, this is just an example for 0% APR and then this lease still not that bad, but in some cases, lease is worse if you compare that. Now, but if you are the kind of a person who would be changing the car in 3 years, then this option is not a bad idea, because after 3 years you paid $8,600 plus $3,000 and you just give the car back to them. Now, there are some good things that you might want to understand for the lease as well. So if you are a person who would like to change the car every 3 years, it might be cheaper to just pay $3,000 down and just pay $239 per month for just 3 years. So your cost is around like $11,600. And then you just give the key back and then get a new car. But if you like to own that car for a little bit longer, then buying comes a lot cheaper, because the longer you own this car, the lower the cost would be for per month. If you calculate, even there's a resale value after that when you sell it, but the cost of owning this vehicle for 6 or 7 or 8 years would go cheaper and cheaper the longer you keep it. But at the same time, the longer you keep the car, you have to spend money on the maintenance and etc. etc. That's all for today. May God bless you. Wish you all the best, and I'll see you next time.